All right, let's jump into it. Wow, where to start? This is crazy. So first of all, it is what 8 past 11 on 4th of April. So look, we'll start off with DXY though, because this has just been a mammoth price target hit. As you can see, this is actually a sort of measured move that I sort of called up around this period here. Obviously, the head and shoulders at this period hadn't sort of completely formed, but it was the general idea that we had this shoulder over here. It was end of January. I sort of put a post up and DXY was around here. I said, look, this is lining up where it could perfectly see. As you can see, you expect buyers around this level. They came in a little bit higher, in fact, in that, but still got that kick up for a right shoulder and then bang, move down, leg down, all the way down here. I thought this move up here, like as I said, I had that sort of measured move up to that 104.75 with possible overshoots should they have chosen to sort of squeeze this a little bit more. But obviously, sort of they just gave up the ghost, and that 420 was the line, and unable to sort of close above that. And that was really the clencher, and then bang, 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 all the way down through here. They left quite a massive sort of gap yesterday, but interesting sort of thing with this, and this I covered this the other day in I can't remember what, excuse me, what I think it might have been copper actually. That in terms of gaps, okay, technically this is your gap from here. You can't even see it with this one here, but that's your gap there from like these points here where you open, actually all the way down here to your close point. So here. Um, change that line back for whatever reason it was there. But the point is, that's technically your gap in that. Yes, you got the wicks throughout the day, and so these wicks sort of kissed and then went back down. I covered this with copper because I think this can be a good indicator when trading gaps and that because gaps closing, yeah, okay, cool, closes, and then you see reaction back the other way. Generally, that's how it'll work. Excuse me, too much bubbly water. um, but when it sort of reacts at the very first option, which in this case is that wick, that to me sort of seems like a sort of a bit of a tell, a bit of a sort of okay, this has got a large fuse underneath it. So they haven't sort of wait to get up here. People are like, look, this is my first absolute opportunity to it all. Bang, and they got it out, and that was the reaction coming through here. So Asia was a little bit sort of quiet, as I said. Look, I thought maybe it might have sort of got back up over here, but certainly sort of around this period here, as you can see, once Asia closed, bang, it just got absolutely slammed down. Came down, kissed that price target, and then sort of settled down into it a second time. And then obviously markets started to sort of react a little bit more. So as markets are sort of coming back up from this sort of stuff, this is obviously sort of people sort of taking profit. So you got shorts, a little bit of a second effort, well actually three efforts down here. And then finally they've sort of sustained to have some little push up over the top over here. But I don't think this is like, oh wow, we found a bottom. This is pretty good in the sense of the fact that this was a price target, as I said, sort of 26th of Jan. So where were we? Back up 26th of Jan, around this period here, 25th, 26th of Jan. So it was around this period over here, called this price target. And of course, we don't remember these things at all, but yeah, market agreed with it, completed that measured move. And this is the thing as well, I say, sort of like, when you're having these structures and you're doing your sort of head and shoulders and you're doing your channel breaks and wedges and all this kind of stuff, it's important to understand how these things work, why they work, and where, these profit levels should be. Because as you can see, this sort of came down, kissed it, and the market agreed very quickly. And, overall, it did. It shot back up from that level there. So, look, I don't think this is, as I said, this will be it. I don't think, okay, now here we found a bottom and we're going to be coming back up. Certainly, there could be a little bit more of a bounce, relief rally kind of thing. It was a pretty heavy sort of sell down. If you look at this on a higher time frame, kind of shows the extent of it all. Maybe a daily will just give you a full picture. As you can see, drop through this period and then bang down into here. So the significance of this, apart from the fact that this is the measured move down here, is somewhat of a zone that we had marked out previously. So, going back to sort of start of 23, we've sort of seen the market, oh, actually, even back over here, May 22, we've seen that this level has kind of been respected sort of by the buyers and that. Obviously, a little bit of an overshoot down in sort of mid 23. Look, I think sort of the fact that it has broken down and it's come back down and in such, sort of dramatic fashion, I do think that, we could see some little bounce, but I think if anything, it'll just be a little relief bounce. We got NFP tonight. Expectation with that is to be down. So I don't know if that's really going to be so impactful this week, given everything with the sort of tariffs. We had ADP the other night. ADP was, it actually beat quite substantially. If we go back and have a look here, ADP, so the previous one was revised up from 77 to 84. Okay, slight revision there. They were expecting a bit of a tick up, but they came in very strong. So that's actually a double month on month. Given that this is 84, 74 from the month before. This had little to no impact in the immediate and obviously sustained. So it definitely took a backseat to the tariff sort of stuff. But even as it sort of came out, it wasn't really noticed. I mean, ADP isn't as big as NFP anyway, but it's still, a substantial beat. And, even with that kind of sort of tick in that box for, potential US dollar strength off that, it didn't really seem to have too much of an effect. So I think sort of, look, NFP tonight, should have come in a little bit weaker. That's obviously a tick in the negative camp. So I think we could maybe see a little bit of a relief rally. But certainly if we push up and then if we come back down through the lows, going to put in a little alert on here. So flipping daily. If we push up and then sort of come back down through the lows, first target would just be to sort of retest those lows down at that wick. Excuse me. I don't know if it would necessarily, because it is quite a strong sort of zone, as you can see, it's been respected for a very long time. I don't know if it's necessarily going to be breaking through this in one go. Certainly if it does take out that wick, then we're looking down probably, 100 is probably the number, 995 to 100. Certainly I've heard some sort of large calls of sort of like, 90 and 80s and this kind of sort of stuff. And, these are great to make these big, bold numbers and big, bold calls. But I suppose at one stage, I mean, look, my big, bold call was from, 107 down to 101, and I'm pretty stoked with that call because, what, it came to fruition and played out very well. But, calling 80 or something, I mean, have a look at this on the chart. There's 90. So this is where some of these people, I've heard some of these calls. Let's just drag these down for some fun. There's 80 and there's 90. Look, certainly, if you take out 99, there's probably a good chance that you do get pretty sort of cruisy down here. I mean, I reckon sort of around sort of 93, 94 might sort of give a little bit of a sort of support area. But again, look, this is all just fun and games for the moment because it's miles off. I mean, there's a lot of stuff that can happen to sort of hold this thing up in here. But certainly, I mean, if we have a look at this big move up over here, that's a 161 retracement down at, say, 94, 94 and change. Comes in line with this sort of support area over here. So I think if anything, that's probably your target that you're heading for should 99 be taken out. So let's put a little bit of an arrow here just for fun anyway. Bang, down from there to there. That's your sort of bigger sort of call with it all. But I mean, calling 80 and all this kind of stuff, look, people work off different timelines and time frames and all this kind of stuff. I mean, 80 is taking you back to, sort of 2014. And look, all these things considered, this is what I've been sort of saying, that Trump did say when he came on, he wanted, yields down, he wanted sort of a weaker US dollar. And for love him or hate him, he's going to get it. That's the whole sort of point of it. Like he's pushing things in that sort of direction to achieve these things. That's the whole point. He was elected, and that's the direction they want to go, and so they're going to make it happen. You know what I mean? You can't. I mean, they're sort of. I know he's supposedly not the Fed, but you can't fight the Fed. You can't fight, the government basically. Traders have got a lot of money. Well, not the traders, but like, these big funds have got a lot of money, but then nothing compared to, let's get back onto a normal time frame, nothing compared to sort of, what governments can do. And you can see this every time that you see these people have these interventions, like the market do intervention. And and it just goes bang and gets smashed right down. So look, there's a lot to sort of say that this move isn't played out yet. But those super calls I'd probably sort of hold off on a little bit. So we'll see how we go in that. See what happens when we get a bit of volume in the next hour or so. Look, any sort of top moves here, I reckon 102.76, and that would be a nice sort of little sort of sell-off area should we get a move up towards it. And then I'd sort of be targeting back down towards these lows. I'd probably back down to retest that main level there again. I think sort of maybe the top of this wick could be something. Let's get this off here. Top of this wick could be something to sort of give us a little bit of a resistance. This is on 4 hour here. So this little level through here. Should we get up to this, I think that's an area that we could see them go, yep, that's enough, and then bang, move down here. Because remember, it's always the same sort of structure with it all. We've got our move down, we've got our move down, we've found support, we're going to go move up, find resistance. Typically, resistance will be at a previous support, but this thing just obviously did not give any opportunity here. So look, an overshoot, if it does get up over here, will definitely 103, but I think that's a bit wishful thinking. I think that's going to be your move up, and then this leg's going to come, and this is going to be the one that sort of determines. But given how much it has already come down, I imagine this will just be some sort of more medium-term consolidation sort of through here. So while the market sort of takes profit, chops and changes, and does all this sort of stuff before potentially sort of legging down again. So that's probably what I'm sort of looking for down in this area. So yeah, any sort of move up here, I imagine just to be sold into. Let this RSI sort of kick up a little bit, and then sort of get some positions, and then sort of move back down with it all. All right, and onto the metals. So these ones are just, oof, like these things absolutely hammered yesterday. Get onto this one. So this was the 3 drive. This was the call that we had yesterday. So let's clear some of these things up. This thing got smacked. I mean, nearly 3.6% from the high of the day down to the lows there. So I'm obviously an in-and-out trader, but I shorted this thing up around in the 50s. I think, what was the other one? I think it was up. Trying to find. Chart keeps going up. 51, and I think the other one was, I banked half, 57. So 57 and got out at 66. So yeah, that was probably one of the biggest buck move trades that I've done, which really sort of captured it down here. But the bounce on this thing was insane. This was crazy. This 80 buck bounce off the lows here. You have a look at this. This thing, so I got out at 66, so just here, dropped down a little bit, but this thing just went up and up and up and up and up and up and up, boom. And as you can see, sort of recaptured this sort of 3100 level. And seems to be sort of just consolidating, thinking, look, this could really go both ways from here. I had to turn off the news before because it was just like, you watch that stuff and it makes you think gold's the only place that can go. I mean, equity markets got absolutely hammered. I had a mate of mine sort of mention the sort of circuit breaker things. I totally forgot about these things. Well, yeah, kind of forgot about it, but it's not relevant to your sort of day-to-day trading. We haven't heard that kind of sort of stuff since 2020. And then I heard this morning it was the biggest single day drop since June 2020 or something like this. So equity markets got absolutely pulverized, which is interesting. As I said, like I don't really sort of cover equity markets on this that much, but they actually sort of gave a little bit of a push up early and then just turned into a wick and just went bang and got slammed down. So they're in the midst of a flag break with potential back test of that large wick, which I'll cover in a sec just for the fun of it. But anyway, onto gold. So as I said, you look at the news and they're like, oh, it does not look sort of like great stuff. Excuse me, sort of going on at the moment. You sort of think, well, maybe that's why gold, well, not why, that is why gold's been sort of pumping up, because, US dollars selling off, equity markets are selling off. Where does that flow go? Maybe into the yen? So look, I mean, yen just really ripped through here yesterday. Look against GJ. Yeah, so the yen's obviously where they're parking a lot of it. Look at this. And this little wick up here. I mean, look at this. This is on AJ. This is 300 points. That's a 3% move from, when the board came out, which is pretty much where things flipped. This is so 2 hours, one, two, three candles, 300 points. That's just insane. I mean, this is what trading is is about, but this is also kind of like, wow, if you get on the right side of this, take some bank. But as you can see, it's still holding down the bottom over here. Anyway, point being is, yeah, so we've got to work out where's the flows going. And where are the flows going? The flows are obviously going to the yen. Yen is typically a safe haven. It's been sort of bashed and battered for many years and that because of the BOJ. But at its heart, typically, that's what it is. It's a safe haven currency in that. And it's actually traditionally a more preferred safe haven currency than the US dollar. You could tell this because sort of like, in times of risk off, when it was in the sort of normal kind of correlation of it all a few years ago, that sort of like US dollar would be strengthening. So you, for instance, you'd see Euro and Aussie and that sort of coming down, but UJ would also be coming down. So obviously UJ sort of, that was yen strength. So again, when you sort of compare the two safe haven currencies, where's the chart gone? When you compare the two safe haven currencies, yen was the stronger of the two. So it was the preferred of the safe haven currencies, while US dollar would be sort of like, just call it doing better than all its other pair matches. This one, it was actually going down. So yen is typically a safe haven. And so I think this is really just where the market's deciding to put their flows, particularly if you're going to see metals continue to come off a little bit. If metals recover and keep pushing back up, well, that it's still holding that sort of thing. But I did a little short video yesterday, and also, of course, put a couple of posts on X, that a lot of what had been driving gold through this whole period here was the idea that this Liberation Day was coming. And look, with all uh, certainty, they were right. This thing has just been ripping. It was an incredible, wild sort of day. So yeah, that's why they sort of like have been, look, let's get into gold, and gold's just been going turbocharged. But it's overshot. It's overshot the channels. It's created new channels, all these kind of things with it all. So it's not to sort of say that yes, it's a great asset. Yes, it's a place to park the money, but things can get a little bit carried away. Maybe price should fair value be around 3,000, not 3150 or 3160 or whatever we got to. So there is room for this thing to cool off and still play its role as the safe haven. It's just, if there's opportunity in other areas, so as I said, like say through the yen, um, excuse me, there's a good chance you take all your profit because this thing is, as I covered in that video yesterday, it's run 20% in 3 months. There's a lot of profit on the table there. If we give up sort of 3,100 again, I think we sort of tackle 3,050, that breakout level, and then I'll probably get rid of this. This was just a, so if we move this down, this is for my own sake, didn't fill on this one, obviously I jumped off early, as I do. But if we put this, yeah, no, just trying to sort of see if I can line it up to see if where we could work out a bit of a measured move for this 3 drive. But that certainly got a little bit closer, but not this one here so much. So let's get that out. Boom. 3 drives still played out. Looking for this thing to roll over and take out 3,100. Underneath there, 3070 is going to be an interesting area, and then really 3050. 3050, if you drag back over here, is pretty much around this breakout level, 3057. This was previous highs from way back into 20th of March. And it provided the big breakout, which it never came back to. But you can see the reaction of this thing. It was incredible. Like this sell down was massive. Like that was a great sell down. But the bounce here equally is impressive. I mean, these are the things that you got to start to get used to. And this is kind of talking to myself, but look at this thing. This thing bounced 81 bucks from the lows. You know what I mean? You gotta sort of adjust and get used to these kind of moves because it's not that okay, now we're going to see 80 buck moves in that all the time, but certainly if something can move 80 bucks, and given this is exceptional circumstances, but as this thing was coming back up, it was doing a quick little range of 10, 15 bucks, then geared up a little bit. If you have a look at this on a slower time frame here, as it was moving up through here, just a quick little up to 20, down to 10. So there's a 10 buck range there. Over here, 93, 84. Like, you know what I mean? It just sort of, they're 10, 15 buck little sort of pause points. And they're big moves. I mean, it wasn't too long ago that I was saying sort of through Asia, the best you could expect from gold was like a 5 buck range. Um, you know what I mean? So this kind of volatility is just insane, and you got to be prepared for it because if your position sizes are too big, then you just get whipped out too quickly, and it's just like, well, what just happened? And you got zapped straight away. So unless you do an absolute rocket sort of entry, yeah, things can get a little bit hairy quickly. Anyway, look, point is we got the bounce off the retest. We're seeing if this bounce is just going to putter out. So in theory, this should be a move down, a move back up, and now a move down. So this is the leg we're in now. So this is the one that we want to see. Is this going to come down? Are we going to get a double bottom, or are we going to get a lower low for a continuation? I think this has a lot of room to sort of cool off, hence the little video I did yesterday. Topside moves, I think this thing could really sort of pick up steam. If you take out the lows down over here, underneath 30.50, 3,000 is kind of obviously nice big round number. We got some good support through here. Where are we? Sort of, through this sort of 3,000, 3,010 kind of area. This is an area in which, we're bound to see some sort of reaction. Let's just put this a little bit higher to see how hungry they are. Because this was that little bit where they sort of lifted off. So if you can see the buyers moved up, moved up, moved up, and that's where they took it off. So, 3,015 down to 3,000 round number. I think that could obviously see some reaction. I don't know if the reaction is going to be as big as this. I think this is kind of like a little bit of short squeeze as well and really see how committed the sellers are. That was a great bounce for anyone that caught this one. But the point is, I think that sort of this move up through here, I don't think we're going to see a bounce like this, though I do expect a reaction should we get down to 3,000. You break 3,000, and I think it's on. I think you're coming down back into these levels over here, this 2,900s. Actually, yes, I sort of pointed something out that's sort of coming down to this support down over here. 2,880 was a potential for it all. But again, you've got the top side of these sell areas here. So I'd say, it's a fairly big window, 70 buck window. But as you saw, we bounced 80 bucks. But between 29.50 and 28.80, I think that's definitely the area where we could see this thing, should it break 3,000, come down to. And that's still a very long way down from where we are right now. So there's a lot of work to be done there. But I think sort of a confirmation of a sort of break of their wicks of yesterday. So underneath 3,050, it's going to see a stampede, and I think sort of then underneath 3,000 is where we're going to sort of see that larger kind of sort of move down, so down underneath here. First things first, see if this bounce is done. Target the body fill, so 30.76, 30.54, underneath 30.54, going down to 3,000, underneath 3,000, down to those lower sort of mid 29s. Should this thing sort of continue with it all? We'll have to sort of see how this bounce goes and what they do sort of once volume sort of kicks in soon. But as you can see, up to the 61%, over the 61%, almost up to the 78% retracement of that bounce there. But I think certainly the fact that we saw some sells here, I did a video on this explaining a lot more of this yesterday. But as you can see, we had top side of this little breakaway channel. We got overshoot of this larger channel. If this proves to be some sort of fake out of this channel that it's been sort of respecting all the way through, then that could very easily come back down and test these lower levels to keep this sort of channel still going. And look, it still stays incredibly bullish. Stays bullish within its short term. This is a 50% retracement back down at this level. And I won't even bother sort of getting into how much the whole move here is. I mean, even if it comes back down to there, this is more just for fun. That is the 20, it lines up with kind of around the 23% retracement to come back down to these levels here. still incredibly bullish should it get down to there. So we'll see how we go in that. But as I said, I think first things first, see if this bounce is done. If the bounce is done, that'll be sort of, maybe under 3,100. We'll start to see that move back down. All right, silver. And this thing also got bashed yesterday. So this is one that I've sort of actually also traded very well from the top. I got the break up here. 4 positions actually I had through this period and banked 2 of them yesterday. And this thing has not bounced back at all. So look, this, if you look on the daily, you can see this beautiful, that is a mammoth candle. So this one, I'll leave it there just for the point. But again, should we sort of take out the lows here, put an alert. Okay, moving to price target. Again, another one that sort of, put out that sort of message on the other day, or post out on the other day saying road to 3,100. We're up around sort of 34, I think, at the time. As you can see, this played out very quickly. These things generally don't, I mean, look, that bounce came on gold, but they generally do not sort of this bounce back up like this. So, we could see some move up here. It's broken through a couple of support levels here. It seems to be sort of trying to hold or retest this thing here. I think this could also just come down straight into this price target today. So, underneath 31 is a potential should this thing flip and take out yesterday's lows. Let's see what happens when the volume sort of comes in. But certainly they are bucketing out of the metals, or bucketing out of silver definitely, to the downside there. So, yeah, I think this has probably still got a little bit more in it. I still have 2 of the 4 positions left. I want to see if we can sort of run this one to price target. This is me trying something a little bit different and trying to flex that hold muscle. Because, I'm very much an in-out kind of trader, and you know what I mean? These are the things sometimes when you see these opportunities, you need to try and do the best you can to maximize on these things. And particularly because my entries are up around this sort of like 33.80, 34 kind of area, I've got a lot of breathing space through here. So let's see how this one plays out. Just on metals, I might as well keep going with copper. This is what I said yesterday during the video. I got fills at 488, which I've been waiting for. I jumped out of this thing straight away. That's fine, out of it. I was happy to sit on it and prove to be the correct move to do. So as we can see, sort of, this thing is still cruising through. And this is what I was saying, that I think that sort of all metals are going to be having a little bit of cooling. I don't think sort of, they don't always typically run together, but there are periods where, we are seeing all these things, particularly silver's wearing that sort of manufacturing hat at the moment, and that's getting smacked. Copper's getting smacked, and gold seems to be coming off a little bit here as well. I think that we could be in for another sort of day down here. So, look, I still wouldn't mind buying copper. I'm just not in a crazy rush in that. I mean, you got to remember, this thing ran, geez, where's the top? 34% this year. Let it cool off a little bit. Let it come back down. Let's find some sort of better spaces, maybe around over, 457s or so. We got a lot of these kind of areas here, which were very hard and tough to get through. That 488 I thought would have been great, but, the game changes. We had new information out with obviously all this sort of stuff going on with, sort of like the tariffs and everything like this. Everyone's sort of like freaking out a little bit. You got the market sort of like dumping down. Everybody's going into sort of a little bit more protection mode. And with protection mode means less globalization, means less trade, means less manufacturing because people are buying less, in theory. I mean, there's obviously sort of some reasoning to how these sort of tariffs are going to be working. And the idea is, in a very sort of a short, abrupt way that, they move their sort of manufacturing and that over to the US and create stuff over there. It's not as simple as just going over there and doing it. And, that's the thing. If you're a large company, large company, fine, great, you could do this kind of stuff. But there's a lot of people that, export to these countries that aren't that don't have the capability necessarily to just go over and set up a whole new shop over in America. So those people are going to have to sort of raise the prices there. And the thing is, it's sort of like, everyone's like, oh, who's going to be paying? Who's going to be paying? Well, it's like, it's yes, there will be people that are paying, but most likely it's going to be more, sort of just less sales. They're going to look to sort of sell to different markets. Like, that's the thing. It's sort of like, yes, they'll pass on the cost and that, but ultimately the end result is sales will go down. And when sales are down, you don't have the sort of drive, you don't have the sort of cash flow coming in to produce more. And if you can't produce more, well, your demand for these sort of raw materials is going to go down. And that's why you're going to see these commodities come off a little bit, particularly the manufacturing sort of commodities, because, if they're not producing as much, well, there's no need to be buying so much stuff because you're not selling so much. And so, yeah, this is why I think that sort of like this could definitely have a little bit more sort of downside, particularly on those sort of more manufacturing side metals. But I'm not in any rush to sort of to buy this at the moment. A good takeaway of this is the capitulation top over here, and they timed this thing very well. A couple of days prior to it all, a little bit of a pullback, but you know what I mean. Some people got whacked out over here. They would be kicking themselves right now. I mean, look at this thing, 10% down off the highs. Um, you know what I mean? They really sort of just took out the stops and then bang, pushed it back down. So anyway, look, I think it's got some more downside on it. I'm not really looking to do too much with copper at the moment. And where we go, DXY, we covered. Let's jump on to Aussie. Aussie's a surprising one because we obviously got this massive sort of flyer. Let's get onto a lower time frame we can work with. This is when the announcements came out. As I said, markets were very bullish, very sort of risk on for a second there, actually for a few minutes and that. And then the board came out and went, got smacked back down. Came back into this buy zone. I got a feel yesterday, but like with copper, I jumped out of it too quick because I thought, look, this looks a little bit hectic. And, you got to buy these things. Under what context are you buying them? 1 second. And under what context are you buying them? And I kind of felt like, oh, geez, wow, this could come down. And, this was my other buy zone down here. I thought maybe 62, that'll be a nice feel. Didn't happen. And this one ripped up. I ended up buying a couple of times for little short trades up through this period over here. Though it would have been nice as I'd have this one down here. But you take it the plus and the minus of this. Copper had I held that, well, would have been knocked out. Aussie, I sort of took a little bit of profit, and then it moved up, and I missed that. So end of the day, that's a win. You know what I mean? I didn't lose on the copper, and didn't get the big bank on the Aussie. Well, okay, whatever. Live to fight another day. But now we can sort of update this stuff a little bit, and we can say, look, RBA is certainly working in our favour. US dollar selling off, so that's starting to sort of tick along with it all. Just have a quick look at what the yuan's doing here, because this thing absolutely rocketed up yesterday. So let's flip onto the yuan. Took off yesterday. Wow, big move, big move, and they smashed straight back into it. And the more that this sort of comes down, the more that the yuan strengthens. Oof, that's loud. The more that the yuan strengthens, the better it is for Aussie. So let's flip back onto the Aussie chart. So that's moving in the right direction. So to me, that seems like on the home front, we got the RBA going, yep, cool. A little bit of hawkish talk. We got the yuan strengthening, and then we got US dollar sort of selling off. That's kind of the trifecta mix for Aussie to be doing a little bit better here. So we'll see how we sort of go this morning. But this thing sort of could sort of move back up and sort of challenge these 30, what are we at? Sort of 63.70s. So should we break out of this little pullback consolidation, that'd be your sort of first target, and then potentially look higher. Interesting thing with the Aussie at the moment, though, is because obviously it's a risk asset. And this is back up above that, what we call the swing high of that previous range. It's a risk asset, and obviously the markets are absolutely killing themselves, but it's not affecting Aussie. Well, not a great deal. As you can see, overall, Aussie is up here. And I think this is because the yuan sort of really sort of, you know what I mean? That was an incredibly fast move, and you can see the reaction that it had on Aussie. But, ever since bang, it's been pushing back and pulling back and doing this kind of stuff here. So, be interesting to sort of see where this goes at the moment, particularly because, sorry, I lost my train of thought there for a second. We had, sorry, fully just watching this move. Equity markets are sort of selling down, though we've seen Aussie detach a little bit from equity movements recently. And I think that's why, it's not really weighing into a massive factor here. I mean, copper's coming down, but Aussie had detached from copper a little bit as well. So sometimes these things can work well in the sense of it being a bit of a like an elastic kind of response. But at the moment, the main driver seems to be US dollar being sold off. Because if you look at Aussie against a couple of other pairs, it's not doing super, super well. So I think the big driver here is obviously the US dollar and one coming back, and we've got a little bit on the home front. Because if you look at Aussie against, again, Aussie against yen, Aussie's still right down the lows. So obviously the loser in that situation. Aussie against New Zealand is right down the bottom here. So New Zealand's above Aussie. Euro's up around the top here. So that's the week for the Aussie. So I think the main driver is just the fact that they're dumping US dollar. So it's not like sort of Aussie's the great sort of the choice of things in the market. But equity markets have been smacked and it's still moving up. Copper's being kind of hit a little bit here and it's still moving up. So I think that certainly, should we see sort of US dollar really sort of hang around these lows, this could be the range that we sort of end up sort of trading around. And 64 right up into this big breakout level is really sort of where you could see the next leg should things come. So I think sort of like to get that, you probably need to get equities on board, but it doesn't mean that you can't sort of bounce around in this area here. Look, break this level here at 63.14, then you're back down 62.90s, that kind of level for a little bit more of a sort of pullback. But as you can see, this is obviously a resistance area here. It's odd times, given that, but look, if we go implement here, that's a resistance. I mean, you can't really count this. It just went crazy. That was news-wise and that with it all, but around that point, resistance, support. So it's got to hold this area here. Should it hold here? I think sort of really you're kind of targeting, 63.72 for a topside move, which is a 40-point move. Should we sort of get onto it and move back up here? But certainly it's got things working in its favour to be a buy at this point. And finally, we'll finish off just with that one, which I sort of covered a second ago. This thing, look, it was on its knees, it squeezed up, sell zone, bang, come down. Obviously, this is just abnormality kind of thing in the markets, but this thing rocketed, moved absolutely through the roof yesterday. And, so the PBOC have a 2% sort of window in which it can move each day. So that's why you pay attention to the fixing, because obviously if the fixing is higher, that 2% window is higher. It gives it more room to run. But, as we can see, this is right up into these old sort of highs that we saw back in, where was this? This is around Feb. So back in Feb and that sort of around where we know that the PBOC does not want it to go past this level here. So it's interesting to sort of see this move undo so quickly because, as I said, it's a fairly managed currency. So, I mean, is this just the PBOC moving or is this the markets actually moving it? Well, it's certainly sort of saw opportunity to sell it and push it back down into this zone here. So maybe they just don't want to rock the boat because that was one of the things they mentioned during the speech as well, that, don't want to see countries, well, they don't want to see countries retaliate, but they don't want to see them sort of retaliate by way of, currency manipulation. Because obviously, look, if there's a tariff there, but, they're making it worth less, well, that can sort of, dull the effects of the tariffs a little bit. But, anyway, it's back down into this zone. See if this move holds. Underneath here, this is probably an area that I'd be interested at. To sort of see what happens. 725 underneath 725, this move could really continue down. This could turn out to be a big sort of grab and fake and move down here. This could be the move that we needed to get down underneath this sort of 720 level. 720 is the major break. Should that sort of come, if we see that happen, we could see Aussie really sort of pick up some steam. But we'll see how this one sort of goes. But certainly at the moment, it looks like it's wanting to make another leg down. Underneath here, that's kind of the move that we're looking for, a big test of that major support, and that could be the big liquidity grab to drive it all the way through. All right, so that's it on the charts. In terms of news coming up, I don't think we've got a great deal through Asia. No, nothing. Bank holiday in China, for whatever it's worth.
And then not really much sort of through Europe and nothing of note. The big one, as I said, is NFP 151 previously 137. So expecting a bit of a cool down. I think the unemployment rate sort of holding flat there, but I think this kind of number set, if we do see this, I think still it'll have a somewhat negative, muted effect on the market. But certainly it's not a reason to buy US dollar just based off this. Not yet. I think we could see some consolidation down towards the lows there. That's it from me.